All right. Good morning, everyone. Tim Davis coming to you guys with a weekend market review. Going to start out the day by taking a look at the S&P first. Today is Saturday, May the 6th, 2023. It's about 7:50 a.m. Want to point out again that we're still in the bearish market. We're in caught in this trading range, and I've highlighted this, I'll say a little while ago. 4,200 seems to be the level that the S&P has not been able to break. And the $3,800 level is like the lower part of the broader range. And we'll show you guys something on the monthly chart real quick, but I'm gonna show you guys, finish showing you this first. So here is an established range. Looks like we have not broken out above this range. We have not broken out below this range. Looks like in the intermediate, we established a new level of short-term level of support. And I'm gonna say that's right around 40.50, around 40.50 for the S&P. As you can see, we pretty much made it down to that 40.50 level, bounced back up towards 4,200, came back down towards this 40.50 level. Now we're on our way back up towards the 4,200. I think once we break this lower level, and I think we will eventually, once we break the 40.50, then we'll probably continue to head back down towards the bottom part of this range. Then we have to see what happens. So as we trade through this week and next week, again, this is probably going to be the near-term range. And we have to see what happens once we break to the upside or to the downside. I think more than likely we'll break below this 40.50 eventually. And we have to see what happens if that does happen. So again, in the near term, we're headed back up. So we could go up a little bit further come Monday or Tuesday. Maybe back up towards 4,200. I don't think we're going to reach that level all the way, but then we got to see what happens. I think eventually we'll come right back down at some point. So that's what the S&P 500 daily chart looks like. And let me show you guys what's unfolding on this monthly chart, because I think this is crucial and very important that folks realize and see that, granted, we had a nice little move up from the October lows, but it pretty much didn't really, make any big headway. You look closely, this 20-period moving average on this monthly chart is still in full control. Look at it. This blue line is my 20-period moving average. It's still in full control, and we're right now. This May candle is testing the top of that 20-period moving average, which leads me to believe that eventually, sometime in May, we're going to come back down towards the bottom of this range, because it's been extremely hard for any price action over the past several months, over the past year, to break above that $4,200 level. We did here slightly, but came right back down, you see. So there's been no sustainable moves above that $4,200 level that held on a monthly chart in over a year, and doesn't like that's bound to happen. It's like that's going to be stopped again. And every time we got to the top of this range, or we haven't really been back to the top of this range for a while, not this strong. But if you look very closely at the oscillators and win percentage, like it may be starting to hinge lower. And CCI, there's a big divergence or gap between the green line, and call it tan line. Normally you get that gap, normally that gap tends to want to close. So I would say as we go throughout the month of May, heading into June and July, I think it's going to be some rough sailing for the overall markets. That's what the monthly chart is showing us. All right. Let's go back to a daily chart real quick. So that was the S&P 500. Let's take a look at the Dow Jones. Dow Jones monthly chart, daily chart, same thing. We see this wide range, and this one, we probably shorten this range a little bit now, since we didn't make it back up to the top here. And I don't think we're going that far. It's like we got a gap up here. So got a gap up in price action, then we came right back down, almost like a shooting star, and then we came right back down. So with that said, I think we probably established a new area of support here. I'm sorry, new area of resistance. So probably right around this level here. So right around here is probably where we can target, right back close to 3,400. I think that's going to be a ceiling. Right now, we're right at a level of resistance, right at that 20 per movement average on the daily. So if we do break above that, we could travel right back up towards this 3,400 and then come right back down. Okay, but that is the short-term area of resistance, right around at 3,400. And then if we look below here, right where this candle is here, that will represent, right, this level here is going to represent an area of resistance. That's right around 33,000. Might as well say around 33,000. Close to it. So right around this level, right around at 3,300 is, I would say, it's going to act as an area of support. Now, if we break above this 3,400 or below this 3,300, that's going to be the new established range. And I think more than likely we're going to end up breaking below this 3,300 because we look straight across at this upper target. We've been struggling to break and maintain a level above the 3,400 level all year long. Even back here, you see, we have not been able to break above. Sorry, folks. We have not been able to break above this level. Just have not been able to do it. So again, we got strong overhead resistance. We could see a little more move up, and then so beginning of the week, sometime this week coming up, then we could probably see a return right back towards the downside. That is the Dow Jones. That's the Dow Jones. Okay, let's move right along to the NASDAQ. Take a look at the NASDAQ. Okay, here's our NASDAQ. Again, right back up towards the top of this range the NASDAQ is, and I think this range appears to be real tight. So I would say right around this 1269, right where this is. We're right back up towards the top of that range, folks. And that's going to run us, we're going to see the NASDAQ run into some continued resistance up there. So 12,270 is an area that I'll pay close attention to see how much higher that this NASDAQ can go. Again, and once we hit this 12,000, if we hit that 12,700, 12,270, we could be looking for a possible reversal back towards the downside. So that's what we're looking forward to next week. Doesn't look like we have much higher to go on the NASDAQ because it is right back up towards the top of this range. So we could start to see that pull back in the near term. So NASDAQ, let's take a look at the Russell. Okay, look at the Russell oscillators. It's a little bit different because it's been the one that's been in the doghouse for the most part, a lot longer than everything else. But if you look at the oscillators and the full stochastics, they're all starting to continue to point higher. So we could see a little bit more rally within this in the Russell. But keep in mind, there's gaps in the market. There's gaps here below the market. There was a gap up here. So anywhere around this range, this will probably be our range, near-term range. So right at the 20 per movement average, of course, is going to act as an area of resistance right around 1772. Then if we go a little bit higher, we can go a little bit higher up here around 1786. So this 1786 could act as an area of 1785, 1786 would act as an area of resistance right along with this 20 per movement average right around 1770. Then follow low right around this 1700 level, folks. Told you guys before already that if we break this 1700 level in a meaningful way, look out below, because we definitely could see some bigger moves to the downside. So that's where we stand now. Again, it's because the continuation to the upside, very short-lived, and then we're probably going to see it move right back down. All right, now let's take a look at the VIX real quick before we end this session. Let's take a look at the VIX. All right, here we go, folks. So look at the VIX. Look at the I want to point this out too, because this is what I mean by divergences in the VIX. So look at the longer term picture of the VIX, the bigger picture. You see the look at the bottom, see the CCI. It's been trending higher since the middle of April. It's been creating these higher lows. Hit ultimate low down here. Then we pull back, hit another low here. So it looks like we could be in store for another pullback here. But we've been creating these high lows along the way. And every time we hit you know, a low somewhere down here, we trickle right back up. So the VIX is in general, look at the bigger picture, it's on its way back up, folks. So keep that in mind, even though we see this big red candle that formed on Friday, we could see a little bit more pullback in the VIX. Then I think eventually, you see that sell signal there, we'll pull back a little bit more, then I think we'll come right back up. So right now the VIX is trading around 17. We could see a little bit more move down, maybe back down towards 1650 or somewhere around there. And I think the next move up in the VIX, I think we'll break this level of resistance, which is around 21, right around 2145. For around 2145, we can see the VIX come back up to test that level after we pull back slightly. So pull back slightly from this body, and then I think we'll run back up to test that 2150 level within the VIX. All right, folks, that is what I have for you guys. Again, we still have a banking crisis, believe it or not. We still have an inflation issue, believe it or not. We still have Ukraine and Russia issues, believe it or not. We still have tensions over in the east with Taiwan and China. Also, we still have a lot of countries that's banding together to try to remove the US dollar as their main currency. So pay attention to all this is global and economic, it's global economic and economic news, folks, because it's going to affect how well we do in the overall markets moving forward. Again, if you look at some of these monthly charts is what I've been really paying attention to as to what we can expect to see moving forward. Here's a monthly chart of the VIX. And so far, this May monthly chart is starting to look a little bullish. If you look at this downward trend we've been in for quite a bit, and it's like the monthly chart is ready to cross with a possible buy signal in the full stochastics. Same in the Williams percentage, same in the CCI. And right now, this monthly chart is fighting. This monthly chart is fighting to put in a strong green candle this month. So we have to see how we fare towards the end of May, but I think the VIX will probably show a green month this month. So we have to see how that pans out. And then if you look at the monthly chart on, let's say, like the Russell or the S&P, is struggling, especially the Russell, is struggling to maintain this support level. It's not really making any higher highs, it's making these lower highs, and it's struggling to maintain a support level. So there is a think there's a volcano waiting to brew. And if we get this collapse, I'm really paying attention to the Russell. Russell probably gonna be our first indication of when we're really gonna see a big collapse in this market. We break below this level here. Told you guys before, that's just below. Let's see exactly what it is. $16.56. So we see the Russell get below 16.56, then we know that you know, there's some problems. There's some major problems that's going to continue. All right, folks. Food for thought. Pay attention to the global economics, global news, economic news, and pay attention to the VIX, and definitely keep an eye out for this Russell. Until next video, Tim Davis signing off. I will see you guys next time.